Let's start with crude prices now, which have declined to 7-month lows today, and we did see a breach of $90 per barrel also on the lower side. The Brent crude oil prices are also trading around that $105 per barrel. The crisis in Greece and the slowdown in China has investors spooked about energy demand, and that's what's weighing onto the prices. For more on crude, let's go across to Simon Waddell. He's senior oil analyst at IHS Global Insight, and he joins us in London. Simon, hi, welcome to the show. With crude oil prices down nearly 14% in the last 3 months, do you see prices taking a breather here?
I think we might see a little bit of a pause in the next coming days, just simply as we wait to see what happens, not only with the Eurozone, which is probably going to take a little while before we get some idea about whether Greece is going to ultimately be in or out, but also, of course, what's happening with Iran. And there have been some signs that there may potentially be some kind of deal on Iran's nuclear program coming up, but we're still waiting to see what comes of that. So I think in the absence of any more damaging news or anything that moves things significantly, we're probably in a little bit of a holding pattern until we get another view on where we're headed in the direction of those two elements.
Simon, also with the U.S. inventories at 22-year highs, do you think that would put a constant pressure on the prices for the near term?
Well, certainly the high inventories are helping limit the upside risks, or were limiting the upside risks of the price rises we've seen. We're pretty well stocked ahead of the summer, but it is still a very tight market. The Saudis are producing really quite a lot of oil, and a lot of it is going into inventory. But they're producing that volume for the possibility of further disruptions in the summer, and we will see a slight boost in terms of demand just for seasonal reasons over the next couple of months. So certainly the inventories are helpful, and if we do have some movement on the Iran situation and perhaps more bad news out of Europe, then we could see prices falling quite a bit further, and certainly inventories are not going to stop that. But they're there essentially as a potential cushion, and it is still a tight market.
Simon, today is a slightly better day when it comes to crude prices, half to nearly 0.7% down on the higher side. Where do you see the crude prices in the near term, and how do you see them ending 2012?
We think we might see prices falling a little bit further in the near term. We don't think that they're going to fall too much further. We don't think that there's a collapse imminent, similar to what we saw in 2009 when prices fell into the 50s and 60s. We think there's quite a high price floor here, so we're not thinking that prices are going to stay very long below 100 for Brent if they do get that low. And we do think that by the end of the year we might see things moving up a little if we have a little bit more hopeful economic news. But a lot will depend on just how the Eurozone situation plays out and whether Iran is able to reach some form of compromise and get its oil back on the market. Those are probably the two crucial elements which will determine whether we see prices going much higher than 100 for Brent or dropping a little bit lower than that.